Hello and welcome back to Market Vibes by Sri Lanka. I'm Oshada Divasgunasekara and I will be taking you through some of the key macro developments during January 2025. Looking first at inflation, Sri Lanka continued to witness deflationary conditions for the fifth consecutive month, with deflation measured by the Colombo Consumer Price Index being recorded at 4% on a year-on-year basis amid revisions to the electricity tariffs that were made during January 2025. Moving on to the interest rate environment, on the 28th of January 2025, the Central Bank of Sri Lanka decided to maintain its overnight policy rate at 8%. Meanwhile, the market interest rates continued to decline during the month of January 2025, with the average weighted prime lending rate declining 50 bps during the month to reach 8.56%. The 12-month T-bill also declined by 49 bps to reach 8.47% by the end of Jan 2025. Moving on to the exchange rate, the LKR started to depreciate during December 2024, and this continued in January with the LKR depreciating by around 2%. The indicative rate published by the Central Bank of Sri Lanka closed at 297.58 rupees to the US dollar on 31st Jan 2025. The rupee has come under pressure recently amid the recommencement of debt servicing, the external debt restructuring being completed in December 2024. The demand for the dollar could continue to rise over the next few months as Sri Lanka has now eased the previously imposed vehicle import restrictions from the 1st of February 2025, and this could result in the rupee seeing further pressure over the next few months. In terms of the vehicle imports, new taxes were announced and the market fully opened from 1st of February 2025. Moving on to the gross official reserve position, Sri Lanka's gross official reserves declined in January 2025 as well to end at $6.1 billion by the end of Jan 2025. The pace of reserve accumulation is expected to slow down in 2025 with the external debt servicing commencing, plus also vehicle imports resuming. However, the target reserve level of $7 billion by the end of 2025 is expected to be reached with multilateral and bilateral funding from our key trading partners expected to come through during the course of the year. Looking at external trade, Sri Lanka's export earnings for the month of December 2024 improved 10% on a year-on-year basis to $1.1 billion. This was mainly due to a 24% growth in agricultural exports, mainly in the tea, coconut and spices subcategories, whilst the textile and garment exports grew by 2% year-on-year to $448 million. Imports during the month of December 2024 increased by 29% on a year-on-year basis to $1.9 billion. Consumer goods imports increased by 46% year-on-year, whilst there was a 38% year-on-year increase in textile and garment imports, while a 49% year-on-year increase in investment goods imports was also recorded. Fuel imports also grew by 4% on a year-on-year basis in December 2024. The rise in imports during the month resulted in a significant widening in the trade deficit during December 2024. Earnings in net services improved by 12% on a year-on-year basis to $369 million for the month of December amid improved tourist arrivals. Looking at the industrial activity, one of the leading indicators, although data is slightly delayed, is the electricity sale to industries. And when we look at the chart that you see on the screen, in 2024, you can clearly see that the demand from industries for electricity has started to pick up compared to 2023, and it is still below 2021 levels but rising, which means that industrial activity is picking up. Moving on to the tourist arrivals. Tourist arrivals improved by 21% on a year-on-year basis in Jan 2025, and it reached 252,761 persons for the month. This was the highest ever arrival numbers that Sri Lanka had achieved in the month of January in any year in its history. The arrival numbers for the first 5 days of February was recorded at 44,293 persons, indicating the continued momentum during the ongoing winter season. Looking at worker remittances, in January, it was recorded at $573 million, which is a 18% year-on-year growth. Although on a month-on-month basis, there was a 7% dip due to the seasonality factors, where the month of December usually sees higher remittances due to the festival season. Looking at equity markets, the Colombo Stock Exchange continued its momentum in January, gaining 7% during the month, following the 21% gain it saw in December 2024. However, at the time of recording, a slight pullback is observed so far in February 2025. In addition to the updates, the new government's first budget is expected to be presented in Parliament on the 17th of February 2025. And with that, we will conclude the Market Vibe segment for January 2025. Thank you very much.